Thanks, Doug. And, good to be here. I thought today, since my understanding is that I have a good, decent little amount of time, but that there's going to be some local stats after the fact. So I did definitely keep it more on the national piece. One of the interesting things about today and the timing of this meeting is it allows me to do some cool stuff that I wouldn't be able to do at other times of the month. So one of those is to show you the latest October data, which has been created but hasn't been published anywhere yet, which I think is super interesting. It's not, some boring number. It's gonna maybe make some waves out there, and you guys get to see it first. If this had been a week ago, wouldn't have been created yet. If it was a week from now, it would have been published, but we're right in the middle of our production process. And so I was able to include those. The only caveat with that would be, I just asked that this is being recorded, that the recording doesn't go externally anywhere until at least next Monday, if it's going to go externally at all, just because these numbers are not published yet. And for the same reason, I'm not going to be able to share my slides until next Monday. So if anyone's interested in those, I can do that then. I'll just set up an email today to fire that off. And the other thing that I was going to talk about today was some of the fundamental reasons behind what we're seeing. It's not just looking at MLS data and going, this makes no sense. It's about looking at the housing stock and housing construction and our population and demographics, which I think explain a lot of it.
Okay, so I don't answer you. I'm just listening to
I'm getting some audio there. I'm good now. And then the third thing I'd like to finish with is something that we developed last spring to help track the decline in the market and rebound, which has proven super useful. We're always a month ahead because we have the data before it's published, which I'm going to show you, but we use a daily tracking of data I'll show you August, September, October, but instead of just 3 data points, daily data gives you 100 data points all the way through that. That also shows you the trajectory into November. So while as far as the forecast goes, next year is still very uncertain. One of the biggest problems is, are we going to have enough listings for people to buy if you're forecasting sales, right? And to the extent that that doesn't happen, it's going to continue to spill into the price side. So it makes it very hard to forecast right now. We're still not in normal times at all. But I can show you what we do have and what to maybe expect over the balance of this year and the direction that things are going in, which you might find very interesting. But you're on the ground doing business every day, so maybe this won't surprise you at all. I'm just going to share my screen here. Ooh, look, I got it in the first try. So I'm going to presume that everyone can see that. Okay, great. Okay, so this is just a title slide. So the first thing I'm going to start with, I'm going to move my own face out of the way here so I can see what I'm talking about. The first thing I'm going to talk about is a StatCan series that's, I believe it's 050001. It's like literally their #1 thing that they publish, which is annual population of Canada. People and households are what create demand for housing. So I think this is a good place to start. And when you look at the series overall, it's actually pretty smooth looking to the eye. It looks like you draw it with a ruler. But if you difference it, which is this, so it's like the change in the number of people every year over 50 years, you can see that it's actually quite volatile, and it's all related to immigration policy. So you can see here that we had sort of this flare up back in 1989, but generally, 300 to 350,000 population growth for 50 years, sometimes lower, sometimes a little bit higher. But then we can see is in the years leading up to COVID, 16, 17, 18, 19 for sure, we had huge gains. I mean, we're talking about 40% increase in international immigration numbers. That's a massive increase in terms of the need for when we talk about the main driver of population and housing growth being immigration. And then we're still sort of building homes based on some old rules of thumb. I feel like this policy here sort of flew under the radar a lot more than it should have. And 2020 is obviously quite a bit lower. 2021 is going to be too. But if you can imagine a non-COVID world, say, or if we can sort of imagine where we're going to be out in 2028, 29, 2030, we're talking like it's going to be way like maybe off your screen. So if you imagine this thing over, this is 50 years, imagine over 60 years with your mind's eye. This is like a huge step function in this series. And it's not just one flare up like we had in 89, it's cumulative year on year on year on year. So if you look at a 5 or 10-year change, these numbers are going to be massive. And the thing about new Canadians is it's like pure housing demand. Everyone needs somewhere to live, and nobody is putting a unit of housing anywhere on the housing continuum back on the market because they've left that where they were from, right? So I'm like, say, if you're going to talk about like a millennial first-time home buyer who might put like a rental apartment on when they absorb their first home, this is just pure demand. And see where that impacts our numbers in a minute when you look at how supply has been absorbed over the last 5 years as these numbers have risen, and it lines up pretty closely. The other thing though is imagine there's no population growth. We know it's record population growth, but imagine there was none. And we just existed as the population was 10 years ago through time. One of the things about our population is there's not the same number of people in every age group, right? That's why we have these generational cohorts. I know that, boomers this and millennials that, it's often qualitative, they're always battling with each other. I'm Gen Xer, I'm up in the stands eating popcorn watching. Nobody's come after me yet. My kids aren't old enough, but what you can see really interestingly here, and this is a very simple representation of household formation, it's just the number of people in their 30s every year over 50 years. And you can see the massive growth in that as the baby boomers came into this space where there just wasn't that many people before this group, right? And then as they moved into their 40s, we dipped, and this is Gen X, right? And then if you look at what's going on right now, here's all the millennials coming in. So we've already passed peak boomer in terms of the number of 30-year-olds. And if you look at StatCan's high growth scenario, which we were actually running ahead of before COVID, so it's not unreasonable, this thing is not just going to go off this slide, it's going to go off the screen. So again, record level immigration and record sort of household formation of just this increasingly middle-aged population that's massively flowing into the housing space before that other big group at the far end, the boomers have really started to flow out of it in any meaningful way. So you just have a system where we've got a percentage of a record growing population that is in middle age, that's bracketed in there, when you buy your first home, but before you go into long-term care or something, right? And so that's one of the biggest factors causing the issues that we have. So we need to be building a lot more homes than we are. We do a lot of talking about it. I've often joked that, I heard about the missing middle 10 years ago, and we still call it the missing middle. So, we had 10 years to be building that, and we haven't made much progress, as I'll show you right now. This is CMHC housing completions on a monthly basis, seasonally adjusted, another 50-year chart to give you a big picture look at this. First thing I would draw your attention to is sort of the last 20 years. Well, we got a little bit of a blip in the last 6 months, and that's nice to see. But generally, we haven't seen much in the way of growth. If anything, we're underbuilding after the financial crisis. A lot of builders went into business and or were just super gun shy about building after a major housing crisis. There was a lot of just capacity destruction. Even if you wanted to ramp those companies back up, they were gone. Very true in the States, but here too. So that, this, if you sort of squint your eyes and just blur them a little, it's like we haven't had much growth in the housing completions in 20 years. And if you look back to where I showed you those other big surges of household formation, the early boomers, the Gen Xers, we were building almost as many then as we are now. Even though, we arguably have a lot bigger issue needing new housing now because, first of all, there's a lot fewer places to build. So the question becomes, what are we building? Well, if I add on some color here, you can see at the far end, this yellow is apartments, and it's now 60% of the completions, right? Whereas the blue, which is detached housing, has been falling. It's basically been halved in 20 years. At the same time that all of this millennial group and new Canadians are also in this same age range, are all moving from their 20s to their 30s. So it seems like we're sort of building in the wrong direction. 10 years ago when they were building so many condos in Toronto, it was blowing everyone's mind I think it was 2012, and everyone thought it was a disaster. The builders would say, look, these millennials, we got demand as far as the eye can see. They don't want to live in your suburban plastic fantastic world, man. They're cool. They want to be downtown where the music and the bar scene is and their friends are. It's like, well, that's not what a millennial says. That's what a 25-year-old says. And I remember thinking like, my dad used to always say to me, it's like, come talk to me in 10 years. And so that's where we are today. And sort of with this mismatch and all of these young couples that are like sort of, I'm hearing stories about like, there's household formation when you move in with, your partner at 26. There's also a household transformation that tends to happen sort of 5 or so years later when your household goes from 2 to 3 people to 4 people. And, drive until you qualify out of Toronto was a trend that I've been watching since 10 years ago. It's not just COVID that's causing people to want, and of course in Peterborough, that. I mean, that trend was hitting you guys in 2016, 17, just before fair housing. So it's amazing. It went as far as Kingston actually. And, but during COVID, it's actually gone as far as North Bay. It's amazing. So what's next? Oh yeah. So there's obviously, that's the growth in the housing stock, but obviously the existing housing stock going back, 20 and 30 and 40, 50, 60, 70 years, 80 years, has a lot of great family homes in them, bigger lots and all that. So this is the existing listings on the market on all MLS systems in Canada on a seasonally adjusted basis over about a quarter century. And you can see that it's quite cyclical, obviously. That's the housing cycle. You can probably remember how soggy the market was back in 2011, 12, 13. Back when you would take your clients to see 10 different homes that were lingering around on the market. Those days are long gone. But look at the decline we've had in this since 2015, as just massive demand has absorbed inventory without putting it back on. So you just have a lot of first-time homebuyers, which I've already shown you. It's sort of, you can see how it's sort of, where's my mouse? Yeah, it sort of stalled out during B20 and everyone was like, problem solved. And then it shot back down in sort of 2019 and early 2020. This is where COVID hit. We took another leg down as people took their homes off the market during the lockdowns. And then we took another leg down when people came back to the market and started buying like crazy, to the point that now we're literally on the eve, I think in November, this is going to happen, of dropping below 100,000 units. So the pins on the realtor.ca map, or like over the whole country for the first time ever. So this is a major issue. This is the one chart I really like to show often first when people say there isn't a supply problem in Canada. And it's like, okay, well, this is most of the homes that are for sale. You can compare the population to the overall housing stock, but it's really about, who's buying and who's selling. Because like a lot of these great family homes are going to have some family living in them for the next 40 years, right? So maybe you should be building. Now, this is what sales look like over sort of, I think it's 35 years we have now. And the first thing I draw your attention to is the incredible volatility around COVID, which you all experienced, compared to the financial crisis or B20, which destroyed the market. This is so much more volatile. It really, stretched this axis and squished everything else in history. It's funny for me to think back of all of the news releases I wrote where we were going, oh man, sales are down 5% this month. The media is going to kill us. It just looks like nothing. And I think it's a good, maybe it's a good analogy for COVID. But what I would say is after those initial lockdowns, we rebounded. We initially were making up for lost time, fair enough, we thought. And then things just stayed really, really strong. And what I'll point now, of course, you heard the Bank of Canada, I think just last week or 2 weeks ago saying, at least housing's cooling off, it's cooling off. And which was true up until, here's the October number at the far end, and you can see that it's reaccelerating. That was a bit unexpected. Sometimes this is just, months when more new listings come out, you get more sales, and it just goes to show how much demand is still out there. And that in many cases, and I suspect in your region more so than others, that you'd be getting way more sales if more homes were coming on the market. And it becomes this sort of self-fulfilling problem of, I want to sell my house, but there's nowhere for me to go. Now, if I take those sales numbers and put them in annual context, I think this is an interesting thing that happened this month. This is annual sales over 40 some years, 41 years, 42. And what's interesting is 41. If you look at this dark blue bar on the far end, that's not the 2021 number, obviously, because we're not done 2021. That's just the 2021 year to date. You'll recall that 2020 was a record for sales, which sort of shocked everyone, given that it was the year of COVID. We've already passed that somewhere around Thanksgiving weekend. So we're already a record for sales in 2021. And I suspect this thing is going to go to, our forecast is about 650 for this year. So it'll be around that. Our forecast for next year is a little bit lower, but still very strong. But forecast, things can turn rapidly. And like I said, it's very difficult to forecast the number of sales when you don't have very much to sell, and arguably getting to a point where that's going to really not just spill over to the price side, but really start to limit the number of sales that can happen. So you divide active listings by sales. It gives you a number of months of inventory, which is my favorite. It really tells the whole story all together. And if you know how to interpret this chart, you can sort of guess what prices are going to do. So it really encapsulates the entire thing in one line. You can see, the cyclical nature. Back in the 90s, there was no price growth, and we went into a housing boom in the early 2000s. And then we had the financial crisis, and then we sort of had that soggy period that I described in the early 2010s, which was sort of, things lingering around. It wasn't like the 90s. Prices actually still matched inflation, and were able to actually grow because of low interest rates, but still not, not even balanced market, a buyer's market almost. And a lot of that was, this was before the oil crash, when the prairies were going nuts in Newfoundland, and a lot of the rest of the country had a lot of inventory hanging around after the financial crisis. And then the oil price crash happens, and those two things flipped. And obviously the rest of Canada is a lot bigger than the oil patch. There was a lot of migration, a lower dollar, industries ramped up everywhere. It was a really ramping up business cycle, as you recall. So we started to move towards seller's market territory. Brief pause for B20, which sort of did something for a little while, but it certainly wasn't a solution. As a solution to household debt and financial market vulnerabilities, it was not a solution to getting more people into home ownership. And of course, where you can see us now, we're still completely off the charts. One of the interesting things about this slowdown that we've been seeing, where people analyzing it, only looking at the sales side of things, is you got to realize that this is a ratio. So yeah, the sales were coming down, but the listings were still falling too. It's not like they were going in different directions. And so the months of inventory barely changed during this slowdown. And we've been saying, the craziest market ever was 1.8 months of inventory nationally. And this huge slowdown we're up at 2.1 or 2.2. It's like, that's basically the same. It's not different. And then of course you can see in September and October, what's happened with that ramping up of sales is we've gone right back. And so one of the quotes in the news release is like, it's not just that we're moving back in the direction of where we were this spring. We might already be there and just don't know it yet. One of the charts I'll show you at the end maybe shows that. It's just like, it's caught me by surprise, and it might catch some other people by surprise. But 1 month of data isn't a trend, so we'll just keep an eye on it for now. But I think it's really interesting. So now I'd like to break out into the daily charts that I was telling you about. So it's going to break this. So if you look down where there's these few data points, I'm going to break that into 100, 200 data points that shows you sort of the behavior of sales, listings, and the sale to list price ratio over, in a normal year in 2020, and then how 21 compares. So let me just explain this chart quickly. It starts at New Year's Day and it goes to the end of the year. The gray bars are just a normal year. We use a 2015 to 2019 average for that. You can see all the stat holidays. This is sales, by the way. So you got your May long weekend, Canada Day, August civic holiday, Labor Day, Thanksgiving, and then Christmas down here at the end where it goes way down. The blue is what happened in 2020. So this will look familiar, the big initial crash, and then the rebound. Of course, this was super useful to us when, the monthly data points just look like a really sharp V, but we could see on a daily and weekly basis exactly what was happening. And we saw this turning point a month and a half before it was actually published, which was super useful. For instance, when CMHC published their ill-fated, everything's going to go down the toilet forecast, and when they published that, we were already back way up here. And so I remember my boss saying, "Shaun, take this forecast seriously." And I said, "I am." It's like, look at this, they're wrong. And of course, 2021 is the red line. You can see how crazy things were in the spring. And I'll show you in a minute, that's because there was a ton of new listings then. And then we were if you look through the summer here, sort of floating somewhere in between normal and last year. So every month was sort of like the second best June ever, the second best July, the second best August, the second best September. But check out where we are right now. We are really converging very close on that blue line, and it's possible we're going to pass it. So whereas things normally go down at this time of the year, if suddenly a bunch of listings seem to be becoming available, I don't know why, maybe we're just getting more back to normal, and some of the people that have been, hunkered down since March of 2020 might be reemerging. It really something to think about next spring, but maybe there's going to be a bit of it before the end of the year. So this is going to be an interesting one to watch in the November data, because this of course goes right up until yesterday. That just in the last week, we're really getting close to getting back into record sales territory. Now this is new listings. So obviously you can see back in the spring when you got this big gap that opened up sort of some of the most new listings ever, very briefly, and they all sold. So we got these huge sales numbers. And then when they went away, the market calmed down this summer. Maybe we just had more things to think about than housing for once, with the pandemic looking like it was, well, we were all getting vaccinated at least. So, and the thing was kind of going away. And then listings sort of a little bit back towards normal here. It's more than we had in the summer, but it's still not a lot, which is why that overall stock of active listings is still falling. It's not, this hasn't even started to stop falling or even turn a corner to go back up yet, which is another reason why, a good way of adding houses for sale is not to expect existing owners to sell in a market like this, but to build a whole, if you build 100 of them, they're all for sale. They're all empty, right? So again, if you've got a lot of pure demand coming in, it might make sense to be building more pure supply, which seems like in the last election campaign, everyone was on side with for once. So I kind of said, well, I spent my career trying to convince these people of this, and now they all agree. So now what do I do? So I'm trying to figure out, how are we going to get this stuff built? And so we got to take some, urban planning courses or something. Now this is the sales to new listings ratio. You can see that with, like listings go up, sales go up, listings go down, sales go down. So the sales to listings ratio over the course of this, like most of 2021, is basically in line with the big rebound last year. So this idea that there's this big slowdown, well, if the listings go down at the same time, things are actually just, the ratio doesn't change. And so it's a bit of an illusion that, demand is going away just because sales go down, because it's also a supply story, right? And every time the listings go back up, everything sells. So I would suspect that there is a lot of demand there. And imagine if there was just this massive flood of listings and price growth just stopped, you would have sales go absolutely off the chart, I think, because I think that there's that many people out there that are still looking for a nice place to buy and own. And finally, this is a really interesting one. This is the sale to list price ratio. You can see a normal year in the gray. What's really interesting is where we were just before COVID, and we were telling our management at CREA, because a lot of this has flown under the radar. We were like, B20 is over. This market is going to go crazy in 2020. And they were like, what? But we were looking at going into a seller's market anyway, just not the kind of one that we're in now. As you can see, obviously, this is the rebound over the second half of this year. And then, as you'll know from working in the spring, that some of this price growth and some of the offers that you were getting over and above list often lower because of that as a marketing strategy. So this is a ratio where the sale price is going up like crazy and the list price is often posted a little bit lower than what you really would expect for it to go for in a normal market. Creates this huge gap in this ratio where it was way up here. It was like, as this was emerging in February and March, we were like, how is this possible? Is this data right? But what's really interesting is that we're seeing it slow down. There wasn't as many multiple offers, as you know, price growth slowing down, but still going up, obviously. And just in the last couple of months, what we've seen is this turnaround, which I'll show you in a minute with the HPI, where we're really seeing a reacceleration in this thing. I wonder to what extent the prices themselves are actually reaccelerating as fast as the HPI suggests, but we haven't gotten into that market again where people are really starting to use that strategy of underpricing the home. So which is the numerator here is going up, but the denominator hasn't quite as much yet, which is why we're not as high as we were in the spring, even though most metrics would suggest that we kind of are. And on that note, I'll show you the HPI, our beautiful seasonally adjusted overall Aggregate Composite HPI, the smoothest chart in the data world, in my opinion, and one of the coolest. And when you account for thin sample size, seasonal compositional problems, overall compositional problems, and actual seasonality, which we do in a partnership with StatCan, you get the smoothest line around, where you can actually rely on every single one of these month-to-month changes to actually indicate what prices are doing and not just what homes are selling or what time of the year it is or policy changes or anything like that. And you can see way up here, that's October. So I think that's going to catch a lot of people by surprise that if you look at how smooth the series is and how big that increase is, that's a huge increase. It's on par with a few other times in history only. This spring, no surprise, which, market conditions are very much in line with that. This summer when the rebound first kicked off and everyone burst out of their homes and started buying homes like crazy. And March of 2017, right before fair housing, which all of you, I'm sure, remember very well in your part of the country. Now, obviously, it's hard to tell that, how much bigger that is than normal. But if I take a percentage change, you can see quite clearly those same times that I'm highlighting stand way above everything else. Huge gains. They don't typically last. So that's where it'll be interesting to see what happens next. Whether this is a flare up, whether the government, if you think back to the last, 6 months ago when prices were growing like this, there was a massive chorus of people saying, government, have a knee-jerk reaction, do something right now. And they didn't. And they admitted, it's like, yeah, we just need to build more. Like, we're not going to keep changing policy. I wonder what's going to happen this time. I think that the OSFI stress test, that fixed number, 5.25%, is up for renewal in December. So I suspect that that's what they could do and just further hammer first-time buyers while existing buyers with all their big equity just keep moving around to sort of take out the competition of all those young people. Not a solution to this problem. And of course, these are percentage changes of an ever-growing number over time, right? So if you actually take the difference number, which is the change in dollars in a single month, you can see that up here, October of 2021, which we're about to publish, was more than $20,000 nationally in a single month, which is the biggest gain ever. And so, oh, there's my arrow. So I think that's all I got. I'm not over time, I don't think. I'll stop my share. And I think that story sort of hangs together. I think that it's a bit surprising that we're back where we are, but it's actually not. If you think about those market conditions and the idea that sales have been coming down with listings, that situation actually hasn't really changed. It's just that sales are now fully being constrained by the number of listings, which is a place that we never really got to before now. And so I'll leave it there.
Thanks, Shaun. That's fantastic. Do you have a couple minutes for some questions, if there are any?
Sure.
Do you have any questions for Shaun? AJ?
Shaun, do you have any concept as how many of the purchases are for investment purposes?
Can you repeat the question? No.
The question is, do you have any concept of how many of those purchases that we're seeing are for investment purposes versus single family purchases for residences?
No, I don't. But I think that one of the things that's been identified as a problem of inequality right now is that people who've been owners for a long time have all this equity to play around with and are doing just that. Like a lot of the activity that we saw in Toronto cottage country this summer was, it's not first-time buyers who are going to live up there. So it's just a problem with inequality of like, if you've owned a house for 40 years, you're rich. And if you're young and just starting out in the world, you're not. And so that would be a sort of a secular trend that we've never seen before of, the rich, if you have, it's that French economist book, if you have capital, you can acquire more capital. And if you don't, you can't. So I suspect that there is, but we don't have any, the data that comes through doesn't indicate that. We'd have to look to another data source for that.
Thanks. Anybody else? Anybody at home that's got a question, go ahead and unmute yourself. Vanessa's got a question.
Shaun, describe what the HPI benchmark
The question is, could you describe what the HPI benchmark price means, what it is?
Sure. Well, better yet, I could have my colleague Chris come and do a whole presentation on it. But what it is effectively is and you have one, what they do is if I have an example where I could show you, but if you try to analyze trends in it, what it does is it's constructed at the neighborhood level, which is the coolest thing about it, right? Which only realtors have access to. I have the market level stuff where they aggregate up all of the neighborhoods to an overall Ottawa or Montreal or whatever, but you can actually access it at the neighborhood level. And if you try to do an average price for a neighborhood in a property type, you might not get a sale like every 6 months. And so the average price is that one sale. whereas the HPI uses a rolling 3-year sample and models all of the features, basically the value that consumers give to all of the features of a home, and feeds them into a benchmark home type for 1-story, 2-story townhomes, apartments where applicable. And you get this really smooth line for that neighborhood. And then there's some really cool party tricks you can do with that, where you index a sale price from 12 years ago and it goes whoop, and it gives you an estimate and all kinds of neat stuff. There's a tool that we publish that you can embed. You may have it, I'm not sure, but my colleague Chris can certainly come back and give you a whole presentation on how it all works and what you can do with it.
Great, thanks.